You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging these days. Glad to see so many of you have been enjoying Double Pro Week, been pretty much double everything coming at you this week. Double Options Boot Camp, Double Options Playbook Radio, Double Pro Q&As, earlier this week for all of our secret club kiddos, including the return of the Viceroy. I haven't talked to him at all this year, so that's been kind of fun to check in with him, as well as Greg from Genesis to talk about volatility and skew and the crypto landscape. That's always fun to get a peek into as well. Where can you guys go to get a peek for yourselves? TheOptionsInsider.com/secret club. And, of course, if you're listening on demand, all we ask of you folks is that you keep rating and reviewing. It really does help all the new folks continue to discover the world of volatility. Let's see who we're going to discover on the show today. First, I'm joined once again in the southern volatility mecca known as Austin by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Yeah, great to be here. Exciting day. Lots to talk about.
A lot to talk about indeed. And also joining us, holding down the MIAX hot seat. Let's see if the technology gods are smiling upon him again, because it's a return appearance by our old friend, Mr. Tom JARCK, the Vice President of Proprietary Product Development over there at MIAX. Mr. Tom, welcome back to Volatility Views, sir.
Thank you, Mark. Hopefully you can hear me okay. Excited to be here. And, good to hear Mr. Meatball back on the show. Talk to you in a few.
Yes, indeed. Always good to hear him. Good to hear you as well. Glad to see the technology gods are smiling upon you once again. And we thought, you know what? It's a crazy week. These are crazy times in the world of volatility. 3 people is not sufficient to encapsulate the world of volatility. We need a 4th. So we brought on Mr. Jim Carroll, the Senior Vice President and Portfolio Manager over there at TOROSO Advisors. Mr. Jim, welcome back to Volatility Views, sir.
Very, very excited to be back with you today, Mark. There is a lot to talk about.
There's a lot to talk about indeed. So without further ado, let's get to it. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, some of all trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into the end of the week here, we got a bit of a mixed bag on the screens. The S&P up about 1/3%. The NASDAQ taking a break off, closing in on 0.5% to the dark side, about a little over 0.4% right now. And the Dow bucking the trend, rallying up over 0.75% right now, a little north of 0.8%. So kind of a bit of a weird mixed bag. That means volatility coming into the start of the show. A bit of a weird mixed bag from this time last week as well. Until right before showtime, Spikes was almost literally unched from this time last week. We were at about a 21.25 on last week's show, 21.25 coming into the start of today's show. It just ticked down a little while ago to a little bit shy of the 21 handle right now. So you're down a little over 1/4 point on the week. But in the world of volatility, that's pretty much a rounding error right now. So a whole lot of nothing net show to show, at least from a net vol perspective, listeners. A VIX cash, same deal, right around 20.5 when we kicked off the show. That puts it down again about 1/4 from this time last. I can't remember the last time we saw such little net vol change show on show here. It's been a while in the volatility landscape. VVIX, same deal. At about a 110 when we kicked off the show, down a whopping 2 points from this time last week. Our old friend, the Spiking, though, a.k.a. V-Spikes, the Spiking. That's a good one. I like that. Our old friend, the Viking, a.k.a. V-Spikes, ticking up a little bit, up to about 145. That puts it up about 6.6 points from this time last week. So let's go around the horn. Mr. Jim, our little birdie, told me you haven't joined us pretty much since the start of the year, the first week of the year. So obviously a lot has happened since then. So maybe we'll start with that. Why don't you catch us up on what's been going on with you and what's your take on the mad world of volatility we've had so far this year? Because since you've joined us, we had a bit of a resurgence of the pandemic, then the pandemic starting to hopefully recede a little bit again. Then, of course, a month later, we had this whole invasion thing. On top of that, we had the Fed. We have all these concerns over market valuation. So we've had a lot of froth, a lot of chop, a lot of vol in the market since your last appearance, Mr. Jim. What's been lighting up your tape since the last time we chatted, sir?
Well, you know, I went to sleep after our last session and just kind of ignored everything. So
that's
it all
a good,
fine to me.
That's a good strategy. You know, just nothing exists outside of volatility views. I like that.
You know, I was just looking at something on my screen. Basically, 1 month ago, you know, we were in backwardation. We had the SIBO term structure flipped upside down, and you know, now if you look at it today, everything seems to be just grand and glorious. The last time I checked, we still had no resolution in the Ukraine. We have all kinds of potential supply shortages, inflation, hawkish Fed, and the market just seems to be relatively relaxed about it. The term structure is back to fairly steep contango. But most importantly, we're a week into the launch of 2 new volatility exchange traded funds, and that's what's got me excited.
All right, we'll get to those forthwith, sir. Let's go around the horn first. Let's go back to the greasiest of meatballs. Mr. Meatball, we shall commence with you, sir. What has been lighting up your tape on this mad week of volatility, sir?
I guess what we're looking at is we now the things that were unknown, that we didn't know, are now kind of known. So despite the fact that we still have all these problems, the problems, I guess, are, you know, apparent to the market, and that's allowed volatility to really recede. You know, we briefly got a pop earlier in the week. We saw VIX get up to near 25, and then just come right back down. We're sitting at 2050 right now. Could break 20 today if the market can get a little bit of a bid, and just a pretty phenomenal day of you know, week of trading. I continue to be kind of fascinated at the resilience of the market. I don't know that we're going to see any new highs anytime soon, but the idea that the floor is going to fall out of the S&P appears to be kind of over.
And Mr. Tom, same question for you, sir. What is catching your eye out there in the world of volatility this week, sir?
Yeah, I would just, a few things that catch my eye are just, equity volatility definitely, is kind of normalizing somewhat. Obviously, it's in back, the contango is looking a little bit more normal, but the overall levels are higher. But still, I think I brought this up a couple of weeks ago. Just, when I look at some of the other asset classes, they're still quite elevated. So, I feel like, and you got to remember, like our equity markets too become very much a, somewhat of a flight to quality when the world's going to hell. People tend to, if they have to be in equities and in the markets, they tend to be out of other, countries, other regions, and migrate to the U.S. So, our volatility levels are reflecting that. And, the one thing I would also like to mention is that I believe when I was on the show 2 weeks ago, my call for spikes on that Friday last week was around 21.
I think you knocked it out of the park.
21.25.
I remember Andrew being quite mad that you got him by like 0.2 of a point or something like that. So if you can anger the rock lopster, you're doing it right, Mr. Tom. So yes,
you did. That was all luck. Yes,
you did claim a victory last time you were on the show. So well done to you, sir. Well, before we roll off of you, Tom, I know you guys just put out your numbers for March and MIAX. March overall for the options industry, a pretty darn good one. The second busiest month in the history of the options business. So something going right there, at least from an overall volume perspective. Anything stand out to you, Tom, as you're looking at the numbers you guys just put out from MIAX, sir?
What stands out to me is I feel like every time I look at these reports, I see either the word record or I see the word, all new high, or, year over year changes are typically higher. The numbers are all looking quite good. From the MGX side, where we trade the spikes futures, they had a little bit of a downtick in volumes. Some of that having to do with, believe it or not, the more volatile market, and just kind of a little bit of a, put to the side for the time being. But we see a little uptick in the spikes options. Not volume wise, but just more trade. Some trade flows going through there. Looks like some retail kind of getting involved. So that's been good. But yeah, overall, it's a good story. The volumes are growing, and industry wide they're growing. There's a lot more, just in general, a lot more focus on options and derivatives. From every news story I read, and I think part of that's the crypto world too, kind of getting into the world of derivatives and options and futures. So it's exciting.
It is exciting, and you know what else is exciting is the addition of new volatility products. The last time we were all together here on the show last week, these new products, they had finally transformed from being these ethereal things that had been approved by the regulators but had yet to see the light of the day. People have been asking us for a while, are we ever going to see these products? Are they ever going to get around to actually listing these things? We had kind of put them on the back burner because we hadn't heard much about them. And then last week, the rumors were true. We finally did see SVIX and UVIX finally come to fruition. SVIX, of course, the return of XIV. It is effectively the new flavor of XIV, the short VIX futures ETF, as well as UVIX, which is the double long VIX futures ETF. So intriguing stuff. If you guys haven't voted, we have a few hours left. So I'm not sure if you podcast people will be in time for it, but people listening live out there, if you haven't voted, we have a question of the week along these lines right now. We said, hey, many people thought inverse volatility products died alongside XIV in 2018, but the launch of SVIX last week has rekindled the debate over whether these products should even exist. So we put the question to you. Should inverse volatility products exist? Yes, they serve a purpose, or no, they are too dangerous. And it seems like we got out to this level of around 80% for yes early on in the poll, and it hasn't really wavered. Right now, it's right around 82% for yes, they serve a purpose, and about 18% for no, they are too dangerous. Mr. Jim, I know you weighed in on this one yourself. You're obviously very excited about the launch of these new products. So let's start there. What is it that excites you about SVIX and UVIX, sir?
So there are a couple of things. Mark, that have me excited. Number one, back when this all fell apart in February of 2018, we lost XIV completely, and SVIX, which was the other inverse product, basically had its structure cut in half, so it gave half the exposure that it used to. And likewise, on the long side, UVIX was pared back, although TVIX remained 2x long. And, for a lot of people, these are products that they should literally never touch. But for people who understand the VIX universe, they serve a purpose. They provide access to VIX futures in a structured way. And if you read the prospectus and understand how they work, they can be productive in a portfolio. What's great about these new products is an improvement in the underlying mechanics of them. One of the problems that was, came to the fore in February 2018 was the pinpoint rebalancing that these things had to go through at the end of every day. The new products are based on new indices that use volume-weighted average prices at the end of the day to provide settlement values and rebalancing. So they're less susceptible to what some people have referred to as manipulation that can take place at the end of the day when these things need to move a lot of VIX futures around for rebalancing. So it's my view that these are new and improved indices, new and improved products that will allow people to take a view on long or short volatility. And I think that that's going to be productive in an environment that will continue to be perhaps volatile above average.
So you're firmly in the yes, they should exist camp in our poll.
Was that not clear?
just clarifying for the people out there. But I know these products are actually contentious. When I talk to a lot of people, outside of, let's say, the vol trading bubble or even the, shall we say, high-end bleeding edge retail bubble, I start talking to people in the trading space and the brokerage and the exchange world. A lot of them from the actual industry seem a lot more hesitant about these products and think they really have no place at all existing. In fact, we just did our double dose of Options Playbook Radio earlier this week. Brian over there at Ally Invest, he's been one of the more outspoken critics of these products for quite some time. He's stunned that one of these would ever make it back. I know when they had comment letters and periods with the regulators, a lot of people were voicing their opinion. When we did our flash poll last week during the show, we said, hey, are you folks going to trade these things? It was 50-50. Yes and no. So these things our poll this week is a little bit more lopsided than I expected. But I do want to go around the horn, get everyone's pulse. Tom, you joined us a couple of weeks ago, but since then we've added 2 new products to the volatility fray. What are your thoughts on SVIX and UVIX, and also in general, the fact that we're going back to the inverse volatility well after 2018?
Sure, yeah. I mean, I think Jim hit the nail on the head when he said, these are products that are not for everybody. I'm a big believer in, everybody needs to be, educated and even prove their education on these products before they should trade them. Being in the professional world where we've sliced and diced these things to the minutia, they're different. So it's they're trading products. They serve a purpose. They're good for certain environments and certain strategies and certain reasons, and they give access to volatility to a lot of people in different sizes than they could get if they went to the VIX complex or the SPIKES complex. So they do definitely serve a purpose in my opinion. I like that Velocity Shares was able to get Volatility Shares was able to get these off. I know they were at it for quite a while. With the other ETN product that's been trading at a premium, and you're seeing obviously the shares are being redeemed on that one quite rapidly versus the increase in the ETF world. It makes for an interesting argument over notes versus ETFs versus funds versus the different kinds of setups you can have in these products. But But yeah, it's just the only thing I can always say is just make sure you know what you're trading and be aware of it always reminds me of my friends at the beach in the summer. They'll be like, oh, I bought some of the whatever VXX, for example, and I'll talk about do you understand the contango and the roll down, and and they have no clue. So it's that always scares me. But I just do your homework before you step in.
I think that was the thing that hung up a lot of people, because we saw back in 2018, we certainly saw this on our network. People hit us up who I never in a million years would have ever thought that would be in an inverse volatility product. Yet clearly they were. And so I think a lot of people in the business thought something had to be done to prevent that from happening again. Not just creating a new product that would hopefully overcome or surmount a lot of those obstacles, but also maybe something has to be done on the end user side, whether it's the broker adding new layers of approval or perhaps doing something on their end or the front end to differentiate, let's say, an SVIX, which is a completely different beast from other, let's call them more plain vanilla ETFs out there like a SPY. You go to a lot of these brokerage platforms and they're all kind of just listed there side by side. And if you don't know any better, you might think, oh, this is SPY, this is an ETF, this other one's also an ETF/ETP/ETN, and it's all kind of a similar product family. And you kind of lump them all together, and that's where we find ourselves getting into trouble like we had back in 2018. So I'm curious for you, Tom, you've been in the business for a while. You're an exchange guy now. Do you think maybe we need to do something like that? Make it, I hate to say to put roadblocks in place for trading these things, because I don't want that, but make these things perhaps a little bit more difficult to access or gate them in a way so we could try to at least make people have to click through a few more hurdles to trade them.
I guess there are disclaimers when you typically open up an account about certain, you have to check certain boxes about your abilities and capabilities. So, maybe one more box couldn't hurt, but that's an area I don't want to, there's a much longer conversation around that than I can answer in one sentence. So, but a little bit couldn't hurt.
You have 20 seconds, Tom, go. No, I'm just kidding. Let's get out to the meatball. I know you were pretty excited about these last week, Mr. Meatball. Now we have a full trading week under our belts. I will put that in air quotes. SVIX, that's the one a lot of people are focusing on right now, because that is, of course, the return of XIV. Not exactly blowing the doors off. I looked at it right before showtime. They had done a whopping 49 contracts, and the ADV is 81. So still not quite there yet from an overall volume perspective, but they're only a week old. Mr. Meatball, we've had a week now under our belts. What are your thoughts on the new return of XIV, sir?
Yeah, the option volume's not there yet, but the stock volume's pretty decent. We've seen SVIX trading around 360,000 shares a day. That's not bad. UVIX, which is the one I'm particularly excited about, that's been trading more. We've seen some days where that traded over 500,000 shares. It's en route. It's already at 220,000 a day. It's had some decent volume as well. The options there have traded more than in SVIX, but still nothing robust. Average volume about 500 contracts a day. To Tom's point, or to Brian's point about what roadblocks should we put in place? I mean, it's essentially an option, some sort of futures or options position when you buy these things. I wouldn't mind if you had to have either like futures clearance or level 3 options clearance to trade these, similar to, trading complex option spreads that can get you into trouble. So something like that would make a lot of sense. But yeah, what I will say is UVIX has done exactly what they said it would do. It has been all over the board. I just love the fact that on Monday, this thing touched 1405, and then by Wednesday, it touches 1894. That's almost a $5 range in the course of a couple of days on a stock that is in the teens. This thing flies around. It's moving 6% today. 5.15% today. It is really moving. I think SVIX is going to start getting people in trouble when we go through a period of extended lower volatility. Right now, with the way futures have been, it has not been as easy to just sit and hold and go long it. But, it'll eventually get some people into trouble. But that the UVIX, I think I would not be surprised, and Bill Luby said this, and I agree. I would not be surprised to see this one overtake UVXY in weeks or months, just because of what it is and how much it moves.
Yeah, I think that was my suggestion a few years ago, I think, too, with taking the existing approval levels we have for options and maybe applying some of those to SVIX. I would certainly be okay with that. I'm not usually one for more regulation, but I think we all clearly saw there were problems with who was allowed to access this thing, and there were also problems with the way it was gated and the way it was presented, and we don't want to go down that road again. The proverbial grandmother from Iowa. Got to try to keep her out of SVIX, or at the very least make sure she's educated before she dives in. After that, she's on her own. But let's go out here to our live chat. Age Del Aquarius says, I think the issue is that many people should avoid them, but not all. That gets back to what Jim was saying. But it is hard to screen for who should trade these products and who shouldn't trade them. And when things go wrong, the negative media really hurts the ETF industry and financial services in general. Well, yeah, that one in 2018, that Balmageddon, that was a pretty big one. That certainly caught the eye of a lot of regulators, the eye of a lot of media and everyone else. That one's it's kind of like the old Bearing, some of the big derivatives fiascos. They're kind of hard to avoid in the spotlight. We have other chatters. Regular Luigi's one of our hardcore. He says he's going to avoid them. He's going to stick with his PSQ, and SH Unlimited says, at first I wasn't so excited about them, and he voted that he wouldn't trade them last week, but I think I might dabble in it once the spreads get better. And I agree with the meatball. I am more excited about UVIX. We've been talking as much about SVIX. We haven't even really gotten into UVIX much, which is, of course, the 2X levered one. Jim, all the heat, all the interest, all the debate seems like it's fixated around SVIX for obvious reasons. Which of these two would you say is more intriguing to you right now?
Well, I share some of Mark's sentiment that UVIX is perhaps going to grab more attention than SVIX. Remember that post-Volmageddon, when XIV disappeared and SVIXy was cut in half, a lot of people who were looking for ways to short vol started shorting the longs, especially VXX. Barclays has, how do I put this politely, screwed the pooch with VXX, and sophisticated people who are looking to take a short vol position really have kind of moved into UVXY, and I think are going to pay very close attention to liquidity in UVIX as a way to short vol. I think you also have a very developed options ecosystem around UVXY, and I think that's one of the reasons that you're seeing continued volume in UVXY, because UVIX just has not developed. It's still just a baby. But I think over time the options around UVIX will develop more fully. It will be seen as a way to take the short side of volatility, both from the underlying and the options perspective. And SVIX, I think it's going to take a little longer probably, because people still have those bad memories of what happened with XIV. And even though this is a better product objectively, I think it's going to take a little longer for people to get comfortable around it.
All right, well, we have a flash poll we just put up right now, listeners. It's only going to run pretty much for the length of the show, so if you're listening on the podcast, you're going to be kind of out of luck. But right now, we're asking you, should we apply options approval levels to SVIX traders as well? Very simple, yes or no. It was 50-50 about a minute ago, just went live. You got about an hour to get in there, listeners. So if you're listening live, getting out there, if you're on Twitter right now and you see this, get in there, make your voice heard. Should be interesting to see what you folks have to say. Obviously, this is not the last time we're going to talk about these products. Probably could debate these for the rest of the show. Listen, I'm trying to think. Also, we did Options Bootcamp with Dan earlier this week. He also not a fan of the return of inverse products. So there are a lot of voices on both sides of this issue, which always makes it fascinating. Let's keep on rolling out here. Jim was just talking about the vol surface, how if you look at it right now, you never know. We have an aggressive Fed on the horizon, uber aggressive Fed on the horizon. We have a raging war in Eastern Europe. The lingering remnants of a pandemic perhaps about to resurface. All these other things that are lurking out there. You look at the old vol surface, and you're right. It's all happy, pleasant contango. All is right with the world. As we came into the start of the show, we had that April future down about a point from where it was this time last week, and the May future down about 2/3 of a point. Mr. Jim, you were kind of joking about this earlier about our return to kind of happy, normal contango, but anything catching your eye out there in the vol surface this week, sir?
Well, as I said, I think both in terms of the VIX term structure and looking at the SIBO term structure, which I find useful, it's actually pretty steep. The spread between VIX and 6 month is in the 96th percentile. Not to get too mathy with the audience here, but it feels like we've come a long way in a relatively short period of time, and the term structure is feeling very relaxed right now.
Who's never relaxed though is the Meatball, always on edge, looking for a trade down there in the Southern volatility mecca. Mr. Meatball, sir, what's catching your eye in the vol surface this week, sir?
Yeah, we never got out of contango this week. Even when the VIX got up to 25, we did see the curve tighten up. It got real wide Monday. That was maybe a sign that maybe vol got a little oversold. We had VIX futures still trade around 22, and the VIX at 18.5 with just a few weeks to go. And lo and behold, you give it a couple of days, and vol comes right for you. And we really did see leading into the Fed, the market get real worried, and then vol came right out, and now we're sitting at 2075, and we'll see where we go from here.
Mr. Tom, anything catching your eye out there in the vol surface, and also anything lighting up in the world of SPIX futures, sir?
Nothing really lighting up as far as everything's been, as far as SPIX futures go. I mean, everything's been trading well. We've got the tight bid offer spreads in the front couple of months. Decent volume displayed. As far as term structure views, I think we're, obviously the as Jim said, the term structure is showing a little bit of I guess a little bit of somewhat normalcy, but the overall levels are still high, pretty elevated. Yeah, nothing too much to add there.
Not too much to add on the options front this week as well. One of the reasons why we could spend some time on SVIX, because right now SPIX, we got some new paper out there on SPIX. Still waiting for our friend, the old four-way trader, who took it off at a decently judicious time. Still waiting for him to reposition out there. Right now, our top 5 positions in SPIX options. We got the June 25 puts, the July 25 puts. Number 3, the April par calls. So we're getting some of that action in SPIX now. Number 4, the May 50s, and number 5, the July 25. So outside of the 50s and the pars, mostly some relevant strikes out there. Today in VIX options, a whole heck of a lot of nothing, 136,000 contracts on the tape. That's also reflected in the ADV right now. It's down to 539,000. It's down 31,000 contracts from this time last week. Well, let's do a quick top 10. What are the size positions out there in VIX land right now? We have swung very firmly into the call camp again. So it's kind of like the old days of VIX again, where it's all call heavy again. 70-30 calls over puts in the top 10 right now. Only cost you 117,000 contracts to break into the top 10 this week. That gets you to the July 25 puts, so one of the 3 puts on our list this week. Number 9, $1.25 of the Nov 70s, so back up to those fun strikes. Number 8, $1.25 of the April 40s. Number 7, 126,000 of the May 30s, and again, it is kind of fun to see quote-unquote relevant call strikes making it into the top 10 again. The 75s, the pars, that's all fun, but it is interesting to see these making it back in there again. Number 6, 127,000 of the April 23 puts. Number 5, $1.43 of the April 20 puts. Number 4, 146,000 of the May 35 calls. Number 3, $1.48 of the April 35s. Number 2, still holding out hope there. These OX 75, still 250,000 of these bad boys hanging out. They apparently plan to do nothing ever with these things. Or maybe they're like 50 Cent. They're just waiting for their opportune moment in the sun to take them off and buy their own private island And number one out there, which has eclipsed the aforementioned OX 75s, they are the April 30s, nearly 300,000, 297,000 of those. Those are the big dog in VIX land right now. Nothing big today. Like I said, only 136,000 contracts on the tape. The biggest trade today is 11,000 of the July 30s. So we'll roll on out of today. Kind of the same deal yesterday, only about a little north of 250,000 contracts on the tape yesterday. The big dog yesterday, surprisingly enough, 19,000 of the May 90s, followed by 18,000 of the Nove 120s and 18,000 as well of the Nove 95s. And then 14,000 of the July 110. So 4 of our top 5 trades yesterday in terms of active options contracts in VIX were right around the par strike. There we go. Wednesday was the big day of the week, 714,000 contracts. The big dog on Wednesday, yet again, back to these July 75s, 92,000 of those going up on Wednesday, followed by 70,000 of the May 75s, 31,000 of the April 30s, 28,000 of the April 25s, and 25,000 of the April 35s. Tuesday, about 400,000. The big dog on Tuesday, about 27,000 of the April 23 puts. And, of course, can't forget these, 17,000 of the June 120s. Back to those 120s. Pile in more of those bad boys. And we saw 110s in July trading on Tuesday as well, 16,000 times. It's like someone heard our show we did on the advisors option a couple of weeks ago. We were talking about these crazy upside strikes, and now every one of them other has to have a piece of them. Monday was the second most active day of the week, about a little over 500,000 contracts on the tape. The big dog on Monday, back again to these interesting strikes. June 70s, 51,000. November 70s, 50,000. April 20 puts, 47,000 of those, followed by 19,000 of the April 30s and 18,000 of the June 30s. Mr. Mark, an interesting week out here from a strike selection perspective, to put it mildly. What's catching your eye on all of a sudden we're back to this game again? We're back to these 90s, 95s, pars, 110s, and 120s lighting up the tape this week, sir. What are your thoughts on that?
Yeah, I was noticing that yesterday. I actually wrote that up in my VIX Edge blog today. Yeah, they were buying like the 90-110 call spread. They were buying the May 95s. We saw some back spreads go up again. Some May back spreads, things like that. Lots and lots of upside call buying floating around up there. And my guess is that it's credit hedging. Hedging themselves, protecting themselves, and avoiding them getting themselves into some trouble. So I don't think there's a lot to pay too much attention to there, but it's definitely worth noticing that the hedgers are back.
Yes, indeed. Tons of size out of the money calls going up. 70-30 calls over puts in our top 10. That's kind of an interesting development out there. We'll keep an eye on these. Like we said, these are used for a lot of different use cases. Like we said, probably a lot of credit and portfolio and catastrophe hedging. They also could have a little bit of use. Again, we discussed these on the advisor's option with Mr. Matt from the Oracle, New Hampshire there, from ORATS. He kind of used them as being analogous to crappy, very cheap tail risk puts in the S&P. And they can perform in a similar way if you put them on for very little. Again, you don't have to get to 120 or 110 or even 100 for these calls to explode in value. There's a lot of skew component to these, a lot of Vega component that could pop off at a moment's notice. You have to just be very judicious on when you take them off. Quick on the trigger finger out there. So intriguing stuff. If you want to hear a little bit more about that, of course, check out the old advisor's option. You can find it on demand at just about any platform you get this show on. Let's go on out now. We already talked about SVIX. Mr. Jim, I want to pick your brain on until the launch of SVIX and UVIX was the talk of the town in the volatility space, which was the freaking ongoing kerfuffle, to put it mildly, that is VXX out there. I mean, what an interesting time to launch new vol products when VXX, as you mentioned earlier, is just screwing the pooch left and right, not issuing new shares. And then on top of that, oh yeah, by the way, we actually double issued notes back in 2019 and nobody caught it. And we're going to pay a £500 million fine as a result. So all that kind of being reflected in VXX right now, taking a bit of a hit from a volume perspective. The ADV is down to 228,000. That's down 112,000 contracts a day from our last show. That's nothing to sneeze at. So VXX kind of drying up a little bit, what do you expect when the thing starts trading like a closed-end fund, doesn't do what it's supposed to do, which is kind of somewhat crappily tracked the VIX futures. That's what you're going to get. Coming into showtime, it was at about 23 3/4, down about 1 3/4. Let's do a real quick top 5 out here because we're kind of coming up against it. Number 5, 37,000 of the April expiring today, so the 8th 20 puts, followed by 40,000 of the monthly April 18 puts. Number 3, the April as well, 47,000 of the April 30s. Number 2, we have April 18 puts. That was 51,000 of those, I should say. And number 1, 80,000 of the May 18 puts. Will those pay off? Who knows what the hell is going on in VXX? Jim, as you mentioned earlier, they kind of screwed the pooch. What are your thoughts on this ongoing brouhaha here in VXX?
Well, the greatest mystery to me, and Mark may have some perspective on this because he's much more active in the options world than I am, is why anybody, unless you had a position in the options going into this thing, why anybody would be trading options, given that we really don't know what the ultimate outcome is going to be. Barclays needs to file a rescission offer with the SEC. They haven't done that yet. We have seen some of the notes redeemed. About 20% of the outstanding notes have been redeemed. We don't know who was on either, who was on the redeeming side of that. There are lots of rumors flying around. There's a rumor that it's actually the Barclays desk doing it, that they had some create to lend out to short sellers, and they're trying to clean that up. So it's a colossal mess. It's a black hole. It's not a surprise at all to me that the volume in the underlying has dried up. I just don't understand why anybody would want to trade options in this thing. But
what I'm hearing, Jim, if I can read between the lines, then is that 80,000 those May 18 puts. That's all TOROSO advised. That's what I'm hearing.
Absolutely.
Fading the hell out of this thing is what you're doing out there in TOROSO advisors. Mr. Meatball, same question for you. We got another week under our belt. I don't know if you can say we have more clarity, maybe a little bit out there. What are your thoughts on the ongoing brouhaha that is VXX, sir?
Yeah, to Jim's point, I get why you wouldn't want to be involved in the stock, but this thing is trading at a huge premium to its actual value. And how do you take advantage of that? Well, you don't want to short the stock, right? Because we saw what this thing can do. So what's the best way to try and wait out the Barclays or wait out this product, eventually normalizing? The answer is using options. So the reason why you're seeing a lot of continued trading in VXX options is a lot of traders are either A, looking for another short squeeze, or B, looking for this thing to return to its NAV and playing the put options to target it heading back to its NAV. I personally have a bunch of different little butterflies on, relatively inexpensive, that are targeting where that NAV should actually be trading and gunning for that level.
We're going to gun for a little bit of UVXY next. Coming in to start the show is at about 1275. Puts it down about 3/4 of a point from where it was on our last show. It has ticked up a little bit since then, so it's threatening the 13 handle. Not quite there yet. The ADV kind of hanging out around 231, down about 7,000 contracts from this time last week, but obviously no big evolution like we saw in VXX because we're not seeing the commensurate drama out there in UVXY. Right now we got about 210,000 contracts on the tape. Let's do a quick top 5 out here as well. Number 5, about 11,000 of the April expiring today, so the weekly puts on the 12 puts. Number 4, 12,000 of the June 20 puts. Number 3, everything else is going to be expiring today, listeners. 13,000 of the April 11 half puts. Number 2, 14,000 of the April 12 half puts. And number 1, about 17,000 of the April 13 puts. Those are looking all right. They were looking better this morning. The 12 half puts, they were looking all right. Not so much now. Again, that just shows you how capricious this product is, listeners. These 12 half puts were looking good before showtime. Not so much right now. 13 puts, same deal. The UVXY, this one is always a heartbreaker. Let's see what's lighting it up today. Today, the most active contract right now, about 19,000 of, again, this is all expiring today, the April 13 puts. as well as 17,000 of the 12 half puts. So go figure, those are the top two. Followed by 15,000 of the 14 calls, 12,000 of the 13 calls, and about 12,000 as well of the 13 half calls. Mr. Jim, since you are avoiding all things VXX right now, have you been slinging any UVXY, sir?
No, thank you. Although I do run with a crowd that enjoys writing calls on UVXY because, as we know, it structurally is inclined to go down, and they've been very active in this environment where we've really swung this thing it's been a big turn over the last month from fear and loathing to relaxation. And so if you've been writing UVXY calls over the last month, that's worked out pretty well.
Yeah, we do persistently see, and we see them right now, number 7, the 70s in June, or 10,000 of those are open. So we have consistently seen 70s, 80s, 90s pars, really going back, it seems like, into Q3 of last year, where I started seeing a lot of size starting to pile into those strikes. It seems like some folks awakened to the joys of selling the upside, and they're not getting a small amount of premium for those, so I could kind of see why they may be on board with overwriting those types of things. Mr. Meatball, same question for you. Obviously, VXX, kind of a challenging one. You said you're working some flies out there for some of that mean reversion. SVIX, not quite there yet. So what are you up to, and what are you keeping an eye on out there in UVXY this week, sir?
Yeah, UVXY, I've been kind of shocked at how inexpensive some of the downside is. I was looking at the next week's 12 puts. This thing was trading 11.72 last week. You could have bought the 12 puts for, 18 cents yesterday. The 11 puts are a nickel. We are seeing a ton of volume in next week's April right now as we speak. UVXY is very busy today. Trading, it's already at 50,000 contracts on the day. And pretty darn busy for UVXY. Lots of calls, some decent puts. Let's trade more than that. 1 second here. Let me get the right. They gave me bad numbers. Let me get the right statistics here. So UVXY, yeah, it's traded 200,000 contracts already a day. It's going to blow through its average daily volume. Decent amount of puts trading, decent amount of calls. Traders playing it both way. Today, the biggest trade, customer swept the 13 puts. Another customer came in and sold some of the 12 and a half. So you've got some interesting trading going on today. Lots of paper, lots really, really short dated. A lot of money flying around on this sucker, either going up or down into the close.
Well, let's keep on seeing what's going up and down with your questions. We got a little time left. It's time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's go out really quickly back to the live chat. Like I said, Unlimited says he agrees with the Meatball. He's more excited about UVIX than good old SVIX out there. So interesting stuff. Some people probably going to agree with that. We've got Age saying recession offer is today's trivia word from the Series 7 test. So either he follows Series 7 trivia of the day, or perhaps he's taken the Series 7, in which case, good luck. And then Luigi says he's been scalping UVXY for a little while now, usually long strangles. Interesting. Roll up and down on the untested side and spread it off if vol jumps. Interesting. Strangles in UVXY. Like we've said, you got to be a little bit quick on the trigger finger with those. But hey, there are crazier ways to trade UVXY. That is for sure. Though days like today where you're down to your strike and then it retreats, those can leave broken hearts out there aplenty. Let's see. We've got JJJ, Triple J says, if I buy a 30-day at-the-money straddle in SPX, can I pretty much assume that I have effectively created a long VIX position as well? Well, short answer is no there, JJJ. It's not quite, if you listen to some of Scott Nation's appearances on this show or on the other ones where they just do the straight 30-day at-the-money straddle pretty much for Vol Q. If you're talking Vol Q, you'd be right. But VIX has a little bit more nuance to it. Mr. Jim, you're Mr. VIXologist on Twitter. Why don't you disabuse Triple J here? What else goes into that calculation besides just that 30-day straddle, sir?
Oh, goodness. Well, I think what he was really probably saying is he long volatility as opposed to long VIX, because, trying to replicate VIX through a straddle, is not going to work. But, it's certainly a way to give yourself some exposure to volatility, but not VIX per se.
Mr. Meatball, anything to add there on some of the nuanced differences between a 30-day SPX straddle and VIX?
Yeah, there's a huge difference. VIX is the totality of all the options that are expiring in 30 days. So you're looking at any option that has a bid. So you're looking at, your 2 delta put, your 10 delta put, your 25 delta put. You're looking at the same on calls. So that it's a gauge on really the cost of the entire surface of volatility, not just that at the money vol. And so if you're buying straddles, you're trading a straddle price, not the VIX. Now, are there techniques to trade, VIX futures against straddles? Yes, people do it. But it's kind of like comparing, I don't want to say apples and oranges, but it's like comparing cutie oranges and navels.
Different types of oranges. You're right, because there's that whole vol surface that comes into play, which has been one of the contentious things about VIX for the last few years. You may have noticed there, Triple J. Some people love it. Other people think it's distortive. Mr. Tom, sir, what do you have to add here for Triple J, sir?
To Triple J, I would say that, Mark, covered a good amount of it, being it's, kind of a variance swap replication, the cost of that. But a big part, too, that we didn't mention was that, being that if he's referring to VIX spot is a constant 30-day or spike spot is a constant 30-day number, whereas your straddle is 30 days when you put it on, but it's going to move over time. It's not a constant 30-day optionality. Definitely missing all the skew component there as well. So, and then, spikes is a very similar methodology as VIX. There's some nuances, probably, very, very slight, some differences that I can point out, but probably be a longer conversation. But there is a methodology guide on our, on the MIAX website if you want to take a look at that to kind of back into your spikes calculation yourself and, and see how the differences are.
All right, Triple J, we could probably fill a whole show with the nuanced differences between that straddle versus VIX/spikes. But you're a good chunk of the way there, but it's a whole bunch of other stuff that you're leaving out. And we haven't left our guesses out, listeners, because it's that time. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the most difficult, the most daring, some might say the most dangerous portion of the show, where we attempt to come to grips with what the vol gods hold in store for us in the coming week. And, it was a whole heck of a lot of nothing, like I said, on the week, and that's pretty much the case. I can't remember the last time vol moved this little even during the show. Spikes is right about at about 21.30 right now as we end the show, up about not even 0.05. 0.04 was 21.25 when we kicked off the show. VIX cash hovering right around a 20.85 or so. So that puts us well below the levels we were at for our prognostication this time last week. And Mr. Meatball was feeling less vol. He was feeling 22.22. And that was looking all right until it wasn't. He's about a point away in spikes and multiple points away in VIX. I was feeling a little bit more. I was at 24.15 once again, the Vol gods have deprived me of my well-earned, much-deserving victory. So no joy for me. By the way, look really quickly. We got 20, 25, 22 and a quarter for options queen. Nope, that's outside the meatball a bunch. We'll have our producers go through. If anyone won any of these, 1970, JVC, no joy there. We got a bunch of listener submissions. If you guys win, we'll hit you up, let you know. We will win fabulous prizes as well. So yeah, it doesn't cost you anything. You might as well play along. And you got to do it usually on the show day, though. If you start doing it next week, we can't really count those. It's cheating. So I guess, Mr. Tom, since you said you won a couple of weeks ago, which you did, we will now extend your victory to this week. So you get the pride and joy of getting to go first, sir. What are you feeling for this time next week?
Let's see here. So with the way things are going and rolling down, I'm going to guess we go down to a spikes level of like a 2020.
2020. So pretty much about a point down, 1.1 points from this time next week. All right, Mr. Jim, you weren't on the show last week, so you were not able to be a loser like Meatball and myself. So you get to go next, sir. What are you feeling for this time next week?
Oh, goodness me. I'm going to be hoping.
I neglected, Tom, if you want to amend yourself, I did forget the markets are closed next week. So this is for 2 weeks. So this prognostication is for 2 weeks. So Tom, if you want to rejigger, I will allow it.
That's a really good point. Yeah.
My producer keeps hounding me. No show.
I'll keep it there. That's fine.
Okay. Jim, just got twice as difficult, if not more so. What are you feeling for 2 weeks?
Certainly did. What I'm feeling for 2 weeks is higher levels on both. I'm 25 VIX, 26 spikes.
25 VIX and 26 for spikes. All right, I think we can make that happen. Mr. Meatball, you were the next best loser to me, so you get to go next, sir.
So if we did have it next week, I would say we're going lower. I would put us at 1919, but I would not be surprised to see things maybe get a little frothier after Easter. So I'm going to go 22-22.
Right back to the 22. 22. All right. So there's the Meatball, daring to go next week's level and then keeping it for this week. Yeah, so in 2 weeks, listeners, a whole bunch of things could happen. We could see this much ballyhooed big invasion kick off again in the eastern Ukraine. We could hear more of these hawkish Fed governors come out. We could hear more about the pandemic. All sorts of things could pop off that could conspire to keep vol a little bit frothier. So I have been leaning that frothier tip for a while. You know, I hate to keep beating that same drum, but I kind of don't hate where I was this. So I'm going to tell you what, I'm going to adjust it a little bit. I'm going to say 23.78 for this time 2 weeks from now. So that's your market, listeners. We've got Tom on the dark side at 2020. We've got Jim, or actually Mr. Meatball next at 22.22. Then myself at 23.78, and Jim actually taking the upside above me, which is a rare thing, at 25 for VIX and 26 for spikes. All right, listeners, that music means we've come to the end of another epic journey through the world of volatility. For all you on the on-demand side, that will conclude our broadcast week. For all you cool kids in Secret Club, just hang out. We'll pump some fun stuff in there. We'll be back in exactly an hour to break down the week that was in the crazy world of unusual options activity. What crazy trades we put on this week? Got to tune into Options Oddities to find out. But before we go, let's go back around the horn. Let's start with our guest, Mr. Jim. If you want to leave our audience with any hints or any teases of what you're looking at in the vol space, and if they want to give you a follow to find out more, where should they go? What should they do, sir?
Best way to keep track of me is on Twitter at VIXologist. It's like a mixologist, except using volatility for your cocktails. And I'm just hoping that we continue to swing from high to low. Let's make volatility great again.
Let's make vol great again. By the way, Luigi, I see you scumbagging me again. 23.75. What are you guys doing to me in the chat? Just scumming me left and right. You're on a mission to scum me, sir. I'm going to have my producers disqualify you from this week's contest. All right, check them out at VIXologist on Twitter to learn more. And Mr. Tom, if folks want to learn more about all things spikes, where should they go? What should they do?
Well, not just spikes, but also V-spikes. You can go to MIAXoptions.com/spikes. That'll get you to whatever you need to look at.
Guys got some cool stuff there. You also have, of course, the shift search up there now. A lot of cool stuff. Quick strike up there on those pages. So a lot of cool data over there.
Quick strike, shift. There's also access to our products. The futures that trade on the NGEX, the VIX futures and tax futures products. So yeah, there's a lot of good info in there. And reach out if you need any help.
There we go. And last but not least, Mr. Meatball, if folks want to hit you up about all things VIX, where should they go? What should they do?
Yeah, go to optionpit.com. I'm writing my VIX Edge blog every day with analysis on VIX, spikes, the ETPs, you name it. It's worth a read. Like and subscribe to it, and you can follow me on Twitter at OptionPit.
Give them a follow at OptionPit. Of course, visit optionpit.com to learn more. That's going to do it for us, for all you on-demand folks. Again, Secret Club Kids back in a little bit less than an hour now for Options Oddities. For everyone else out there, have a safe week. In fact, we're going to see you again in 2 weeks for another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.